Good day to you, pro traders, and welcome to the GoPro Trading Monday Market Review, where we run through the principal currency pairs, certainly those that we trade, a couple of indices and commodities, and look at what we did last week, as well as give our view on the outlook for the week ahead. So just a reminder, if you're enjoying the material that we're putting out, please do hit that like button on this video. And if this is the first time you're seeing our material and you want to get access to more free professional trading material as it comes out, please make sure that you hit that subscribe button as well as the notifications bell so that you know when it comes up. All right, so before we look at the currency pairs, just a quick commentary on the general outlook in terms of what we're looking at this week, and also the general theme of what happened last week. Firstly, I'd say it's fair to say that the general US dollar strength pretty much dried up during the course of last week, but we've had a continued surge in the strength of the Canadian dollar, mirroring obviously the increase in the price of oil, as it is an oil-based economy, and also the continued weakness in the yen, which has been great for some of our trading pairs. So those are the two main things that we traded on last week, although there were a couple of other notable trades as well, which we'll have a look at as we go through this. So having said that, though, of course, you can see that we are still on the weekly time frame, of course, in a bearish trend here on the Euro USD. Last week's candle, though, representing pretty much what I've just said, that USD strength pretty much drying up through the course of the week, although it did have a lower close, and maybe we're going to see a resumption of that this week. So looking at the daily time frame, last week we had the end of that retracement. We did get a bearish impulse wave on Wednesday's close, but by the end of the week, of course, with non-farm payrolls, we had a close back inside of our channel's price territory, signifying, at least for the time being, some weakness in that trend. So nothing for us to do there at the moment, except really wait and see. Although, of course, for those of you who are channel traders, if we do get a close outside of the channel and an indication that the next bearish phase one is in train, you can start looking at lower time frame impulse trades, but still a few days to go probably before we see that. Here on the cable, again, you can see how we, after that single candle giving us a breakout of the channel, last week we closed back inside of the channel, really nothing to write home about there at all. And looking like that on the daily time frame, where we saw a pullback. Quite a few people look to get into a bearish daily impulse on this one, but do remember that we were still inside. Well, we had come back inside of the channel on the weekly time frame for that. Nevertheless, it's one of those trades, and even though it didn't work out in this case, in other cases it would. So just remember to keep that probabilistic mindset strongly in place. All right, on dollar yen, just looking at a weekly first, we know that last week we had finally a solid outside close. Now, this is not so much dollar strength, but that yen weakness that I mentioned, and definitely very tradable. And you can see, even though it's still very early in the week, the market has continued to be very strong on this currency pair. So looking here on the lower time frame on daily, we are definitely in a strong trend outside of our full wave channel. In fact, now established with a close on Friday above the previous wave's high. So confirming that second impulse wave outside of the channel. Very strong market at the moment. Looking for a setup, though, we haven't really been given much of a setup, except for that one on Friday, where with the volatility around non-farm payroll, we actually got stopped out for a break even, but nevertheless, frustrating with it immediately after that going straight through. But that's typical of the volatility around the non-farm payroll news announcement. Dollar Swiss, here again, representative of the fact that as soon as we move away from the yen, nothing much happened last week, just a bearish low test candle there on the weekly time frame. And here on daily, also just nothing happening at all. Deep inside a channel, no cyclicity intact, no valid WM patterns, so to be left well alone for now. Let's just go to weekly on USD Cad. First, we are inside of a channel, no valid patterns there either, so not really interested in that for execution on daily, but looking at daily as our selection time frame, much more interesting. We had a valid class 1 M pattern here, as well as a breakout of our 4-wave channel. Even though we did get a close inside of the channel last week, it was marginal and it immediately came back outside of the channel again. So we had a couple of trades on that. Well, we had certainly that bearish H4 impulse, which ultimately almost hit take profit on Friday. Only reached it actually though this morning, and we immediately got another setup to go short. And as you can see, we are short this market again. So there you have that Canadian dollar strength that I was talking about, in this case against the US. So moving to Aussie here on weekly, still nothing changed based on our analysis from a week ago. And even on daily time frame, again, inside of the channel, no valid WM patterns, leaving it well alone. And we can say exactly the same thing for the Kiwi, even more so, in fact. Right, so that takes us into our yen crosses. You guys know I like to look at the yen crosses all together. Here's the euro yen on weekly. So last week, nothing to really be, nothing noteworthy except that strong bullish candle, which has brought us up now today, certainly to the our historical resistance levels here on the daily time frame, with both our 3 and 4-wave channels currently testing that today. So let's see what happens. If this yen weakness carries on, then we would certainly be getting a breakout of the channel. For those of you who are channel traders, you'd be able to start looking to take trades on this on the lower time frame, potentially from tomorrow. Let's wait and see. Same picture for our Gbp Jpy. First of all, just pointing out that on weekly, with this one, we even had a bullish impulse candle inside of the channel. Nothing else for us to do there, but here on daily, of course, now we've got this potential breakouts looking very good. Unless anything dramatic changes, then we certainly should be able to start looking to take trades on this one. It's already quite an extended impulse wave. It started more than a week ago. So, also would be good to have a bit of a pullback. We're expecting some profit taking on this at some point, giving us a phase 2 wave. And if nothing changes, though, that should lead into another impulse wave, giving us an established trend outside of that channel, hopefully within the next week. Swiss yen, also, again, weekly, we spoke about our previous false breakout, confirmed last week, in fact, with a bullish impulse wave. And as you guys know, when we have phase 1, it means that if you had a breakout, it was a false breakout. So it's confirmed that as a false breakout. And although we are still very much inside of the channel with no valid patterns here, it does mean that when we drop down to daily, we've got it had a very clear breakout of our 4-wave channel on Friday after all of the announcements. And from this morning already starting to look for a setup, which we got not that long ago. So this was a valid setup, because that was a valid pullback on that candle alone, with the lower high, lower low, that being the first H4 candle of the day. So at 8 a.m. broker time this morning, we went long on this one. And so far, it's actually almost got to take profit already, and we haven't even been able to manage to stop on it. So that's quite a nice one for those of you who've been on the lookout for that. I see nothing taken on this account, so the trader for this account should just go and have a look as to why that is the case. You know who you are. Right, CAD yen. Remember, we spoke about the fact that the Canadian dollar is probably the strongest currency at the moment, and the yen the weakest. So we would expect the most action here. And here on the weekly time frame, you can see that amongst the yen pairs, this has gotten closest to its resistance level, but it is still inside of the channel. Regardless, though, here on daily, you can see that it's a very strong move. It is now pretty much an established trend outside of that channel. Once again, we at some point expecting some element of profit taking, but we take the trades. We follow our rule set, and when we get our setups, we absolutely take them. So this was actually an H4 impulse that we took last week, and actually hit take profit before the market really took off. We had that following a preceding H4 impulse, which stopped out for a small loss. So again, you can see how the strategies, you can have one winner and one loser and walk away with a nice chunk of profit. So little bit sorry that we're not using advanced targeting on this one, because we would be very much still in the trade. In any case, that's just the way it goes. Let's move on to our Aussie and Kiwi crosses inside the channel again here on weekly, but that bullish impulse candle there also showing this breakout certainly today. I don't think, let's just have a double check on this. This close was 82.02, our channel high. It's just shy of actually having closed outside of the channel on Friday. In any case, we firmly outside of it this morning. So for those of you who are channel traders, you would have been looking for a trade. I see that this trader also did in fact take a trade on Friday. I stayed away from the market personally because of the non-farm payrolls announcement, certainly on my my main account. So recommended for you if you're on a little bit more on the conservative side, and I'm trying to also mirror our mentoring program. So Aussie yen, that was that one. Looking at the Kiwi yen, not quite the same picture as we know. Certainly not the same strength, and we haven't had a breakout, no patterns there, so we've avoided that one. Okay, so that's the end of the yen crosses. Moving into the euro crosses, we did get a breakout of the channel on Eurogbp. Following a bullish breakout, it was a bearish breakout. Didn't go particularly far. Let's have a look at the H4 time frame and the cyclicity on that. So if there was a bearish H4 impulse on this, it probably worked out. I didn't take anything on that. Somebody did note that that at the end of at Friday's close, there was a setup to go long for an overlay. But remember, the last thing you want to do is use the last 4-hour candle of the week as a setup for the first 4-hour candle of the following week. In any case, that didn't work out, but it's still, if you're looking at this on the daily time frame, we still are in a bearish impulse wave, so breakout's still intact for the moment. Dropping down to Euro Swiss. So again, you can see how we've had the test. There's certainly been some Swiss franc strength for a while, as you can see, with it against its main trading partner, the euro here, and testing that support level, our 4-wave channel support level at the moment. Nothing else to look at. But within that test, of course, through the course of last week, we actually got our second bearish impulse wave. We'd taken trades on this before. I don't think we actually took anything in the end. This goes back to the preceding week. So if we discussed this last week, you'll notice that ultimately it almost made it, but it really depends on your spread. So if you were the broker who's got very tight spreads, you would have survived this. If not, then remember your stop on a sell order is, or on a sell is in fact a buy order, and the ask line may well have taken you out on that, which would have been a pity. But that also is fairly typical for this currency pair. And Eurocad, likewise, also not one of our favorite pairs, but we have had a solid breakout on this one through the course of last week, with that close outside of our 4-wave channel on Friday. And looking at that, let me just go to the other chart. On daily, represents this long extended bearish impulse wave, which has been going on for quite some time, and given us a couple of trading opportunities for our lower time frame impulse trades. We had a bearish H4 impulse, which I see this trader also took, and that took a while. It basically took 3 days, which is pretty long for an H4 to hit its take profit, and the market has continued to go south with that. I did note this morning that there was in fact another setup. I see it hasn't actually been taken, maybe because well, not everybody likes to trade on Monday mornings. In any case, let's just plant that right there, and that's what it looks like. So pretty much well, it's a very good reward to risk ratio, better than the preceding trade. So should be able to manage that one, the risk down on that one quite soon, but let's keep an eye on it. Again, a lot of people say, well, isn't that wave nearly over? We don't know. Bearish momentum and oversold conditions look identical and no one can tell the difference. Okay, Euro Aussie. Here we also have on the weekly time frame, we can see that last week we not only had a bearish impulse candle, but it confirmed this is a bearish impulse wave. Now, that is certainly inside of the channel here on weekly, so we can't use daily as an execution time frame, but we can use it as a selection time frame, and did start doing so from, if I'm not mistaken, from first thing on Wednesday, where we had just had that outside close, dropping down to this time frame. I don't have any analysis on those trades here on this chart, but yeah, so some of these win, some of these lose, but you can see that these, certainly from a selection point of view, are still ideal in terms of higher time frame selection criteria for impulse trades or trending trades on a lower time frame. The last of our Euro crosses, Gbpnzd, not showing quite the same momentum. And if we go down to the daily time frame, you'll see even here we are stuck inside of the channel. There's no cyclicity intact. We've left that one well alone for quite some time. Gbp Swiss, look at last week's spinning top. So inside the channel, nothing useful, and that's represented by an absolute mess through the course of last week, so we ignored it completely. A little bit of a different story, of course, on another Canadian dollar cross here, in this case, Gbp Cad. So weekly time frame, we are inside of the channel, but we've had 3 bearish impulse candles in a row, and it looks like that on daily, well outside of our 4-wave channel. And although we did have the retracement that we spoke about a week ago, that came to a solid end through the course of last week. Pretty sure we had a trade, well, did we? Yeah, okay, so it looks like that's the only one that we would have taken previously. I think that's actually a hybrid, and you can see there's been another setup this morning to short this for an H4 impulse. So into that as well. If you're trading hybrid strategies, then you would have taken that preceding one. Remember, take profits though for hybrids are significantly more ambitious, and you can even just go for a straight 3-6 trailing stop all the way through to the conclusion of the trade. So yeah, Canadian dollar pair is really our favorite at the moment, with the yen pairs a close runner-up. Right, Gbp Aussie. I see there's another trade on this one. Weekly time frame, nothing to look at. But on daily, yes, I see even though we're inside of the channel, this is very definitely a valid class 1 M pattern for the selection time frame. So then dropping down to the execution time frame, that's obviously perfect as a setup this morning. Unfortunately, not the best reward to risk ratio here, but we will take it anyway. Not going to complain about that. Gbpnzd, as you can see, we're not really touching any of the Kiwi pairs. We did get a breakout on, what was that, close on Wednesday, so I see it's pulling back again today. Not sure if anybody got a bullish setup here. It's possible that you've taken a long trade there, but clearly this is not working out, and I'd say Gbpnzd now for quite some time, certainly since, what's that, the 6th of September, so over a month, has been a bit of a waste of time. Cad Swiss on weekly, another Canadian dollar pair, of course, and you can see that we've had 2 impulse candles in a row, and despite the fact that we're inside the channel on weekly, it's made it quite a nicely tradable pair when using the daily time frames for selection. So that's what it looks like. We had that preceding breakout. That means this is now an established trend. Not only that, folks, for those of you being ultra conservative, we did have our outside C close here. So this ticks all of the boxes for being very conservative, where not only do you require a class 1 WM pattern on your selection time frame, but it also needs to have an outside C close for the HTC channel. So as I said, that has ticked all of the boxes. Despite that, we had initially a break-even trade, or trade getting stopped out here at break-even, followed immediately by another setup though, which went comfortably to target. Not the best reward to risk ratio either, but certainly a trade that that added to the profitability for the week. Aussie Swiss, looking at our final Aussie crosses here on weekly, you can see not that much happening. but definitely a bullish wave in train. Tested that four-wave resistance level on Friday, but it's only today where it looks like we might be getting a breakout. So quite a lot of resistance in the way, though, before we start seeing anything really tradable. And of course, compared to both the yen and the Canadian dollar pairs, why would you bother when you've got those to trade? Speaking of which, here on Aussie Cad, the weekly time frame finally gave us another breakout. That means that marginal breakout that we had there, it has to be said, in fact, before I carry on, we had that marginal breakout, but that was a bearish impulse wave followed by a bullish impulse wave, which is a breakdown in cyclicity. We've now got another breakout, so let's see if this one has any legs. It doesn't look like much happening today, though, does it? Here on daily time frame, Friday, you can see closed outside of the channel. So if you're looking for things to trade, this might have been one that you'd have looked at, but it's not showing the same momentum as we've seen on some of the others. And it looks like it has bounced off of that historical, more significant support level there. But who knows? I mean, if that keeps on going in a southerly direction, it may well be tradable later in the week. Let's wait and see. Leading us to the last of our Aussie crosses, Aussie Kiwi, and we've spoken about this a few times. You can see the fact that the New Zealand dollar has really not been that matched to the Australian dollar for a while, and over the long term, these are quite correlated, but you can certainly see for the last few months that has not been the case. And after that very long extended bearish phase one, we are now into a strong bullish retracement, which, although that doesn't allow us to trade this with weekly as a selection time frame and daily as execution, it has given us a bullish breakout with daily time frame as our selection time frame, and also ticked all of those boxes without a single close. Remember, that's an open without a single close coming back inside of our four-wave channel. So this has also been a good setup for you conservative guys, where you require not only a class 1 WM pattern on selection time frame, but also an outside C close with regard to the HTC channel. So that's been good. Let's have a look at the execution on H4 and that trade that we finally got into on, what was that, the 6th, that's Wednesday, believe it or not. Or I think early on Thursday, obviously we were able to trail that stop to break even, decent, just over 2-to-1 reward to risk ratio, and that's hit our take profit in the early hours of this morning. So that was quite a neat one. It has to be said, it does follow a hybrid that we looked to get into. Nice breakdown of cyclicity on the phase 2 here, but we did get stopped out with that spike over there, so that didn't work out last week. But as you can see, when you've got nice reward to risk ratios, even if you end up losing a few more trades than what you've won, you still walk away with a tidy profit. Of course, that is the heart and soul of convexity. Okay, our last two currency pairs, Kiwi Swiss on weekly, we're not interested in that, nor that, so we can safely ignore that. However, the last of our Canadian dollar pairs, you can see here on Kiwi Cad, again, 3 bearish impulse candles in a row. Can't use that, well, we can't use daily for execution because of that selection criteria not being met, but we can certainly use daily as our selection time frame. And we have had, well, certainly through the course of last week, we had some tradable options here, particularly in the latter part of the week. I think we were talking about this on Saturday. This was finally the trade that I think we got into, which hit take profit. But there was also a setup a little bit earlier. In fact, I think 2, possibly 1 there, which got stopped out again. That New Zealand dollar during that 4-hour time span actually gave a spike across all of the pairs that's associated with. So there was another one got stopped out, another potential entry there, and of course this one too. So the rest all pretty much worked out. If you got in even later, then you are still waiting for this to carry on going towards your take profit. Chatted to somebody this morning where the take profit wasn't hit simply because of the wider spreads in the early hours of the morning. Remember, a buy order and your take profit on a sell is a buy order, a buy limit order. The ask line didn't actually cross it. so they didn't get their TP hit. So having said that, I think this is still looking extremely bearish, and you'd be unlucky not to still get that take profit hit within the next, well, certainly even today, but certainly within the next 24 hours or so. Right, so that is all our currency pairs. Have a quick look at gold, doing really nothing. I mean, we did get a ring low with last week's candle ringing that previous week's low, but it's deep inside the channel. It's really just been going sideways for quite some time. Interesting thing that, because there's certainly been a lot of chaos in the stock markets, and let's have a look at that, in fact. And if there's lots of uncertainty, then people will often run to gold as a safe haven. Doesn't look like it's happening at the moment, though. So weekly on the Dow Jones, you can see that it's just been chopping sideways now for a good few weeks. Can't seem to make up its mind. And I suppose if they do pass one of these massive budgets in the States, then we will see another boost to the US stock markets. That money's got to go somewhere, after all. S&P pretty much mirroring that, not quite as messy, but still inside of the channel, looking a little bit more bearish, as is, of course, the NASDAQ, which if we just look at that on daily, choppy, but it's spent quite a bit of time outside of that H4 channel. And bearish cyclicity definitely intact on this one. But yeah, let's wait and see what happens there. All right, folks, well, that's it for me. I'm not looking at anything else today. Again, if you've enjoyed this, please don't forget to hit that like button. And if you do want to get our material as it comes out, and remember, we are professional traders here, so we give you guys really good stuff, then please don't forget to subscribe to the channel and hit that notifications bell so that you get notified as soon as the new material is published. And that's it from me. So guys, remember to stay safe. Have a great week trading. I'll chat to you later in the week. Bye for now.